Okay, folks, welcome back. So we're taking a look at the forum. So when you guys sign in, once you put your username and your password in, it takes you to the welcome page here. So it's like where all the categories are. This is where you're going to be finding all of my noteworthy posts that would be like the things I would normally tweet. Like I said, I'm stepping away from Twitter. I'm not closing the account because there's 1,000 people out there who would love to take the account and then, do all kinds of stuff with it like they did the other Twitter account when I left it. The news tab here, you click on that one. Then right here, ICT Mentorship Announcements. Okay, it should be the top one. I have it pinned. So you click on that, and I've just posted just a few minutes ago just to create the thread. So basically it's saying what I just mentioned to you briefly a moment ago, that the things that I would normally tweet to you or try to jog your attention or memory about certain things, they will be posted to this thread. I'm not going to be engaging on Twitter anymore, so my attention is focused primarily on all of you now. I've done enough proving on Twitter. Okay, so either those folks that are outside the mentorship either have faith in what I'm teaching and my ability to do so, or they don't. I really don't care either way. So I want to kind of have my attention focused here and working within the forum, and anything that would be of interest that I see that's either about to form or has recently formed, and not that it's hindsight and useless, because there's so many things in mentorship you've learned now that there is opportunities to engage after certain things form. Okay, and fair value gaps is just one of the easiest ones that comes to mind because we've been recently hammering on that one. So anything chart related, anything your attention on a certain matter, something that would otherwise may slip your attention, this is where I'll be posting it. It'll be a continuous thread. There won't be any like monthly changes like I do with the weekly reviews. I want to keep that this thread here will be one single ongoing thread, but it'll be by date, so you can always find the information you're looking for. But if we look at this here, going back to the main welcome page, the weekly review and analysis area, I'm going to maintain this by month because I want to keep it very easy for you guys to go back and look and see what was I talking about then, or what were the things we were focusing on at that time during the mentorship commentary. So that will stay logged and archived like this ongoing. But the other thread, the news, this one here, ICT Mentorship Announcements, this will just be a continuous post, like a billboard. Okay, it'll just be for me posting. No one else will be allowed to post, and it's just for you guys to be abreast as to what I'm doing or any changes. Like right now we have a schedule. I'm trying to meet every day on Wednesday and Friday to do this recording and have it posted in a reasonable time around the bond close. So if there's a change in that, okay, or if I need to say, look, I can't get it to you Friday night, my family time has my attention elsewhere, then I'll tell you it'll be a Saturday or a Sunday upload for the weekly review. Okay. Other than that, it's business as usual here. So with that, let's go over to tradingview.com. And this is what I've been looking at this week. I'm contemplating the utilization of their paper trading feature. Now, I'm not experienced with this, so I'm going to be very, very clumsy with it. But I had a lot of folks ask me in email what I thought about it. So I've been spending this week, tinkering with it. But let's go into the dollar index. We'll use this for our medium today. So DXY is the symbol. When it pops up, just click over here. And I'm certain that you guys that are very, very versed in TradingView, you're probably going to see me doing things in here. and want to send me a million different shortcuts or better ways of doing it, hold off on that, because I'm not sold entirely on it. But if I make the transition, say, look, we're 100% TradingView, then I'll create a pro account on here, and then we'll use this. But I'm not at that point yet. Okay, so I just wanted to kind of answer a broad brush approach of a lot of emails I got in the recent 3 months or so, asking, and it's not just the same people, it's like a myriad of our members asking what my opinion of it is. And I've been spending this week doing so, looking at it. But if we look at the dollar index, and say we were interested in doing something with, we don't trade the dollar index, mind you, but down here on the trading panel, if you click on that, they offer the paper trading tab here. Clicking on that, you can log in with whatever. I'm a little leery with creating an account, like I said, because it's very easy for people to follow what I'm doing if I'm doing anything on this. But as far as, and you're probably asking, well, what's the point? Why would you even bring this up? For instance, we've been doing the back testing and forward testing for fair value gaps and institutional order flow entry drills. So those exercises and the walk forward was not to be done in a demo account. It's for paper trading. So for things that you want to practice without having the added pressure, and yes, it's true, even in demo, sometimes that creates additional pressure because you're seeing the results of what you elected to do or not do in that demo account. So it's not the best way of doing it. Paper trading before you go into the demo is the best way of doing it, because you want to be able to see what's available in terms of opportunity. You do not want to associate a dollar amount in your demo account while you're learning how to trade. Okay, that's not what you want to do. You want to learn the characteristics in paper trading, and then once you grow comfortable with a nice foundation or a model to work within, then you go into a demo account and you practice with that at least 6 months. So when you see consistency and continuity in your results, then you can start delving into whether or not you want to be a live fund trader. But I don't ever answer that for anyone. You decide that on your own. But I've been monkeying around with this paper trading medium, trying to getting a hang of it, and whether or not I think this is a viable tool yet, I don't know. Okay, like I said, I just started messing with it this week, and it may take a week or two for me to come to a conclusion. If I do decide that I'm not a fan of it, and say you are, don't let that be a deterrent or change your mind about it, because if you're finding use or a gain from using it, don't let my opinion of it sway you. Okay, but obviously if I think it's something that's worthwhile, then I'll just say, hey, look, take a look at it yourself. And obviously by me bringing it up, I'm kind of like instigating that interest on your part to see if it's something that would be useful for you as well. It's not demo. It's to be viewed completely and utterly in the scope of just paper trading. Now, I guess one could argue, say, well, what's the difference, demo account and paper trading, if it's going to give you results or whatever? It's just the constant reminder, subconsciously and consciously, that it's demo on paper, which, again, it's the mindset that keeps people from being profitable in this or finding consistency. So if we are going into it with a sober mind and a perspective on what it is we're doing, we're going to be focused primarily on the process, not so much the net result of being profitable or not profitable, okay, or attributing a dollar amount in terms of those factors, win or loss. All right, so since we have the, don't want to do any advertising for Raging Bull. There is a few folks that have also emailed me asking me, what's up with the dollar chart that I was showing last week and how it's lagging. It seems like it's lagging. There's a difference between the dollar index on TradingView and the one that we've used on AVA and IC markets, they haven't gone down into this candle here, whereas we see it clearly on TradingView. So I don't know what the gearing is that creates the discrepancy. It's not important in my mind. It's not terribly important, because what we're looking at is a 3 market perspective. In other words, it's a triad. That's the strength of using a euro dollar, British pound, and the dollar index, in a uniform analysis, not just leaning on, well, if we all just sat around, at a desk and said, hey, what dollar index are we going to follow? Well, we're all going to have a different opinion about what it is we're going to use. But it still comes down to whatever your broker, if you trade with live funds, your brokers are always going to have a discrepancy. Maybe not so much like we see here in recent days with the dollar index, not seeing its run down into this down close candle, but you're always going to have some discrepancy. And because we had a large wave of new students come in recently, there's a lot of question about, is there something wrong? Are they scamming me? Are they trying to, manipulate me or whatever? Or I'm referring to their comments, not so much that's the way I view it. It's just a matter of the normal disparity between the data providers. And unfortunately, Forex still has a lot of room for that to occur. And over the years, it'll get better and tighter. And I think in a perfect world, it should move very close to the futures market, but not so close to the locked point by point or pip by pip. Because the futures market is obviously a different animal apart from the cash market, and there's going to be a discrepancy between those two as well. So it's something you can argue and wrestle with and drive yourself nuts with, or you just simply submit to the fact that you're not going to know everything. There's always this gray area we have to operate in. So if we look at the dollar, and let me take these crosshairs off, go to arrow. For the TradingView dollar index, we did trade down into this propulsion candle, and we did a nice response there relative to last week. This was their Friday's perspective, and Monday, Tuesday, and today, Wednesday. The absence of any kind of real fair value gap here on the daily takes us to the bearish order block, and right behind it is the breaker. Okay, so we have these two down close candles. Okay, so we can see price trade up into that 97.15 level. Maybe get some response there. It's also within the body of the bearish order block here. If we trade through that, say we trade on the other side of the bearish order block, then we can go into the mitigation block here, and then the fair value gap that exists here. Notice that I'm saying we could do this, we could do that, versus where in instances where I'm very clear on my determination of directional bias, which is what I do not have at the moment right now. I'd like to see if the dollar index wants to respect one of these levels, and if it does and we break down, then I'll be interested in probing that short side of the dollar and long foreign currency. But because I don't know, specifically where we are right now, we're still in this large consolidation, and we're basically around the midpoint or equilibrium from the high to the low. We're hanging around in here. Okay, so I'm not convinced one way or the other, because we still have equal highs and then we have equal lows. So the question is going to be, and this is some of the answers that you're going to get by this video and not by your emails, because I get a lot of these types of emails and they're all from new students. What do I try to trade? The equal highs or the equal lows when it exists like that? And if it's unsure to you, then that's the best time for you to do nothing. And that's what I'm doing myself. Like, I'm not trying to push a perspective or a bias on you, because both exist right now. All right, so for the whole year of 2019 thus far, we've been hanging inside of a 300 pip range on the dollar index and not being able to show a meaningful displacement to the upside or downside. And this is what I mentioned months ago, that we could end up in this scenario where it forces the day trader or scalper model. It just simply does, and it makes it harder to be a swing trader. At least from a personal perspective, it makes it harder for me. Maybe you don't have that right now, and because you're a swing trader at heart, you have no problem doing it. But I'm not a swing trader, so I'm a short-term day trader. So I excel more at that, and I try to keep my perspective in line with that model. But the other question I had was, when I'm looking at euro, and if I were to use the trading view, I would pull forex.com's data. I just simply trust it. So this is what we have for the euro dollar. We did clear, as mentioned last week, the equal highs here. At a fair value gap, it filled that. So with the euro dollar having cleared out the equal highs, filled the fair value gap, we left relative equal highs at 114.50. We have the relative equal lows at around 111.10, 111 big figure. We don't have a whole lot to work on inside of this area except for the order blocks and then a very small fair value gap here. So without the clear distinction on the dollar index, I prefer if we're going to drop on euro to come down, take the sell stops here, fill the fair value gap, and then pick up on the order block here, mean threshold of all the down close candles. Problem with that is very, very low probability, because we still have the equal lows in close proximity to that, so it could spike down through that. I don't like those types of scenarios, and I don't want to sell short where we are here, because it could go higher and make a run for the equal highs. So there are instances where I just don't know, and I want to demand more information about what it's reaching for. Where we are right now, we're in the middle of consolidation. Even though we've ran recent highs here on euro and recent lows on the dollar index, we've already used that information. So we aren't in an area where it's very clear. It's not discernible. I mentioned last week that on the upside, the euro dollar was the better buy. It performed and delivered that. I said that we could consolidate here and allow the euro dollar to sit sideways and then allow the cable market to rally. Let's look at that. GBP, USD, forex.com's data. And I mentioned that this low here, we have a little bit of an imbalance here, buy side liquidity pool here. And if we were unable to go up to this price point, we would just hammer around sideways, and we're seeing that here. Kind of like, think about this consolidation. We might see that same thing repeat here, just on a smaller, like this is a little bit larger fractal than what's being shown here. Okay, it may not look exactly like it to you, but over time they'll start looking like it. You'll know what a fractal will look like. The run up to this low here, I'd like to see it form, because that would give me a little bit stronger view on dollar, which I don't have a strong view on right now, and I rely on that to have really high probability scenarios. Otherwise, it's a scalp or a day trade, and they're not in high probability conditions. So you got to keep that in mind. So I kind of wanted to give you the reasons why I don't have a much more definitive or detailed analysis for this midweek update, is because I don't have one. Okay, so in the real world, you're going to encounter this, and it might change tomorrow. It might change tonight in London, but as of right now, I just don't have a real strong one-sided delivery that I would expect to see on any of these pairs or the dollar. So, yeah, I'd like to, I'd like to be able to sit here and deliver every single day, every single week, a stunning display of, prognostication. But I'm human, and there's going to be periods where I just don't know, and I have to wait for more information. We're at that point right now. Okay, so when we get more information, or when I get more information from price action, then I'll share it with you. One of the things that I've looked at and considered, maybe they took the dollar index down on a daily to run some sell-side liquidity, and then they'll pop that equal high on the daily chart for the dollar. And that would send cable below these relative equal lows. In other words, this could be consolidation that came up, took some buy-side liquidity out, and they may expand down to the downside. I was looking at Aussie dollar, and that really looks like that is what they're trying to push here for these equal lows. Okay, so that may be a draw on liquidity here. And interestingly enough, if you take the wick, get the consequent encroachment, or the middle, from the close to the low, find that on your charts and see if that isn't where we reach for ultimately for Aussie dollar. That's something I'm watching myself personally, and it just looks like they want to revisit this for whatever reason. I'm not going to explain why this happened, because personally I just don't know why it had such a, like a black swan event. If you remember last year in the fall, I was telling you there was something coming. Now, did I see this one coming? No, actually I didn't. But this would have been very painful. We traded all the way down to that price point here. They may want to come back down into here, clear the ones that are long, knock those stops out, large funds. And everyone else will be hoping that this wick gets violated. It doesn't have to get violated. So consequent encroachment may be of importance on this pair here. And I think that's going to be it. I don't want to spend too much more of your time babbling, because I don't have anything really to go on. So much like when it's going to be all you, no ICT holding hand, no pointing out things by ICT. When you're doing your analysis, you're going to have periods where you're not sure or you're in doubt. Okay, and the easiest thing to remember is, when in doubt, stay out. So I'm exercising patience. I'm practicing what I preach, and I'm waiting a little bit longer for more information. So, real final quick word on the lessons for this month. I will be posting, or including rather, a lesson in the weekly review this week on Friday, and I'm undecided about which one, because there's two specific lessons I'm sharing this month that are really good. I just don't know which one I'm going to give you this week, but there won't be a price action lesson during next week's Wednesday or Friday, but the following week there will be. So the second of the two lessons for this month that are outside your normal content delivery when you purchase and you go into the new month. If you're in the core content, this is in addition to all that. This is just basically 2 additional lessons for charter members. Okay, so, but everyone gets access to it because it's part of the normal commentary videos. And that, my friends, is going to be it. Like I said, I wish I had more to go on right now, but I don't. But if I see something I like, or something jumps off the chart that isn't there now, I'll share it by way of the forum post in that news tab. Okay? Until I talk to you Friday, I wish you good luck, good trading. Be careful.